Morning, everybody. I'll just kick off with the acknowledgement of country, acknowledging the Whyalla people and Ghana people, traditional owners of the land on which we meet today, assuming there's someone dialing in from Ghana land, and pay our respects to elders past, present, and extend that respect to any other Aboriginal and Torres Strait Islander people who are present today. Welcome, everybody. We've just got the one person online today, Peter, and also like to make a special welcome to our soon-to-be new independent member, Roberto Bria, who's about to come on board, joining us in the capacity of an observer today. Roberto, whilst you don't necessarily get to vote and second anything today, we would love to have your input on any of the things that come up. That'd be really valuable for us. That'd be great. Just kick off. Does anyone have any conflicts to declare? No conflicts. Okay. I'll then run to the minutes of the previous meeting. Has anyone got any issues, or we're all comfortable with minutes? All happy? Okay. Can I get someone to move those minutes? Pat, thank you. Second, Peter. All in favour? Okay. I think we're going to have a pretty similar tune on this resolutions today, but so be it. Do we need? We've got no external auditors turning up today.
We've got one
there.
So who we got on? Sorry.
Us.
Oh, we do have. Sorry, my eyesight's terrible. Okay. Do we have any items we want to have?
For today, we were going to do it as how we normally do it for this meeting. We'll do item 2.1, and then staff would normally leave halfway through that and have a conversation with them. Doesn't matter what. Yeah, you can do that now and get it out of the way, and then we can.
Yeah, let's
or you
do
can
that.
bring forward item 2.1 while
Let's do that. We're writing to 2.1 now.
Yeah.
Let's run through that, and then
yeah,
if we need to do it, we'll go from there. So item 2.1, page 27, the draft financial statements for the audit completion report. Now, do we want to kick off with our auditors for a bit of an opening there, or Grant, over to you?
Yeah, I can start and then can cross over them, and then we'll leave it those for a few minutes. So I guess for us, that was quite a straightforward audit this year. Actually, it felt very easy one probably we've done. So I think we've gotten a good groove with Dean Newbury. So it's a bit sad that 5 years period's now up and we'll be changing auditors. But so yeah, I don't think we actually had any material adjustments to enter. It was only very minor wording changes and stuff on our financials, and we basically had a full set of clean financials when they turned up. Won't specifically talk probably about the financial result because we've got another item on that at 2.2, but yeah, so no issues with actually the set of financials themselves, and yeah, nothing. We've also got nothing that we have got to report as items since balance date. Nothing's changed since the auditors were here a few weeks ago. There's nothing that needs to go in there from our administration's perspective. Obviously, there's a management report, management letter that will need to get signed off today, but that's been presented with the report. Pretty standard, nothing to note in there. But yeah, happy to answer any questions.
But just before we do, can we just talk to the auditors quickly, if anything from their perspective?
Hello, Samantha Creedon, Dean Newbury, and Anton Brewer. Both of Anton and I were on site for the balance date component of this audit. We found council to be probably one of the most organised councils that we've dealt with this year. So I think the standard of information that was provided, when it was provided, made for a very efficient audit. And as Grant said, there was no material adjustments that were made to the financials that were presented to us.
Great, thank you. Noting that the next item is on the actual results, has anyone got any questions or comments in relation to the financial statements, and if not, we're happy to receive the year reports.
Just from the auditor's perspective, did they have any view in relation to the financial results and sustainability issues?
Sorry, did you get that question?
Yeah, from our point of view, the financial results and sustainability is a little bit outside of our scope. I think that we're all aware of the, however, we are all aware of the challenges that Whyalla does face. I hope that in perhaps 5 years' time, if we get renominated again, we might have some more pleasing financial results. Because we've been coming and going from your council for a long time now, and yeah, we just from what I can see, unfortunately, your financial position is not great, and yeah, I just hope that the future does really give a lift to the city of Whyalla.
Just on the source of grants, you've got 34 million from the state government, 22,000 from the Commonwealth.
Yeah, so it's interesting. When we were looking at how we classify it, the federal. So yeah, I think it's almost a change from the federal government finally listening to some advice they got about 20 years ago. So basically, there's always been this position that the federal government shouldn't be passing grants directly to councils because we're not in the constitution. It's always been on the things, but it seems like lately they will not hand us money directly. So all grants, basically, and except very specific ones, roads recovery and stuff, come via the state government. So that airport grant agreement was signed with the state government. We acknowledge, obviously, in everything we do, there was federal grant funding included in it, but the funds were actually received directly from the state in the end. So yes, we had that conversation as well. How do we classify it?
That makes sense. I just noticed then page 19 of the financial statement. It's just the sundry total is creeping up. It's 5 million in sundry. The auditors are happy with that size of sundriness.
Yeah, it's always that hard thing of like, because we do, obviously each year we do our analytical report and sort of look through at why things have changed and what makes up things. It's hard because there's not a lot in there that is big on its own. There's a lot of small stuff, so it's nothing really material on its own. But yeah, it's hard. You look at it and you go, oh, that's a lot, but yeah, how do you break it up? Yeah, how do you break it up into?
Yeah, I think the question was more like, what is it? Because it's quite a significant number.
It's got a million.
And there's nothing there.
Yeah, and then this was up which
Page 19.
Page 19. It's also gone up $1 million. One problem.
So one of the things that was in there, so this is under contract material other, one thing that did affect it, I guess we had about the write-off of the WIP, so that was about 400,000. So whether that should be reported on, so it's a one-off item when we wrote some stormwater back to so that was reported through all our budget and stuff you would have seen. Yeah, I guess we did pick that up in our political review as one of the reasons for the change. But I guess when you then look at the overall contract material other, whether that's a material enough item to pull out by itself. So that's one of the big items of change. Yeah, I can pull up my analytical review I did, and it does make up the 5 million. Let me go hunting. Yes, okay, so yeah, so some item, yeah, so water gets picked up in there as its own item, so whether I don't know whether that should be reported by itself. IT costs. Sorry, you look at it a couple of weeks ago, and then so I mean, it might be an item for review in the future. There's probably some other items in there that we pull out. Some you pull out almost because they might have political interest and that sort of thing, like legal costs. Like they're probably not actually material on their own, but we pull them out. So there's probably actually some in that sundry that are a bit higher than what the ones we do report, but they're not. They've probably got lots of interest.
So
Potentially.
is it something that we maybe have a note on? Just trying to summarise, rather than get specific, talking around what that actually means, because it does actually one, it stands out because of the percentage of your total expenses.
Yeah.
Without a comment or a note, and it's gone up by a material amount as well.
Yeah.
The terminator in terms of, is it amount or type of expense to specify? I mean, from an auditor's perspective, they presumably were happy that you wrote sundry 5 million. So it didn't presumably breach any accounting principle. But as Laurie said, it stands out. And
Yeah. Yeah. I think to separate out, it normally is materiality, or there are some specified ones within the model financial statement. So some of them are here because they are, they're specified that you should be reporting this separately. And then after that, it becomes down to materiality, which I don't think we met any materiality for any of the other items, but it probably is worth a review next year, whether there's some that are close enough to the materiality to pull out separately so that that figure comes down. You're right, it's probably only going to get bigger over time as well, as some of those items that are in there always go up in value.
Water properly, definitely.
Yeah, we could probably pull out water and like that. That would start to bring that, and maybe even IT costs and those sort of things. I guess this is already the note, so if you're having a note on the note, that might. But what are you thinking? Just some text below?
Well, just something to clarify where it's at.
Oh, I think you could probably just have the major ones. I mean, like, this waste would be contractors, wouldn't it?
Yes, waste.
Some people actually separate out waste as a separate item, but
yeah,
but like water would be one. I think it's the 5 million is actually a large proportion of the amount. So for disclosure, normally you would have something would actually explain it.
Mm-hmm.
So whether it's a note or a breakdown of that a bit further, I don't know what the model financial statements allow you to do. So that's why.
Yeah, I think you can add your own, like definitely, because obviously every council is different. So I think we use the ones that they sort of, and some of the ones they expect you to have in there. But yeah, you definitely can add extras as you require. So I think, yeah, I'm not. Do we think it needs changing this year, or is that an item to review for the future? Yes.
Through the chair, could I make some comments?
Yep.
Look, perhaps what would be better would be to say we would like separately disclosed in that note any amounts over a dollar amount that you think is appropriate. Then that would be a reasonable basis to allocate and how far you allocate down to. That would be my suggestion.
Are you suggesting that for this year, or are you suggesting we leave this year?
I'm happy with the presentation of these financials in the way that they are. However, so I wouldn't recommend that be changed. But that's just from my point of view. If the audit committee want further changes, feel free. Just to let you know, from our perspective, materiality is about $600,000. So on the whole financials. So just to give you some dollar figure of what we would be looking at to consider something material. Now, and this is more just a disclosure as well. So yeah.
My take is if the auditors are okay with it, then fine. But from our perspective,
No, for next year.
just note that where we go.
Yep. Happy to do that.
Peter, anything from you?
No, nothing from me, thanks.
Anything else from you, Pat?
So are we requesting next year that there's just more of a breakdown, or that there's an amount, anything below above an amount, or anything of particular types?
I think, wouldn't you be asking the administration to come back with a proposal on how they would actually
Break it down further.
break it down next, which might be 600,000 or more, or whatever. So
Yeah.
I think it's for you to come back to the audit committee with a how you would actually manage that next year.
Yeah, we can do it.
So I'd just put as an action item. I think.
Yeah.
But the underlying concept that if you've got an item that's not able to clearly be understood what it is, and it is of a material nature relative to everything else, we just need to make sure there's some clarity, so we know what it is, that's all.
Yeah. Yeah, maybe even a note underneath or something.
Yeah.
Yes, the only other thing is your trade and other payables has gone up significantly for goods and services.
Yeah, so that's literally just because of one contract. So that's the airport by itself. There's material enough. So that's probably
I think it proves the timing for you.
Yeah.
Just while you got through that, I had a question on that same page on the maintenance. Like our maintenance costs have dropped a fair bit. Is that as a result of this activity, or is it that the previous year was abnormally high?
yeah. Oh God.
Sec.
Sometimes that comes down to like what you report internally in it. So if it's we do it internally, obviously it gets picked up in labour. So some things do change media between what we do internally and through contractors. But yeah, so there was some items sort of done in 24-25 that picked up probably more of the contractor's role than in 23-24 that might have been done internally, and we picked up sort of the cost of the materials and type of things to do maintenance. So it's because maintenance is one of those hard ones. It's like what's the difference between contractor and maintenance? So sometimes those classifications can be a bit difficult. So when I looked through, there was nothing that stood out particularly, but it was just that some items probably done in 23-24 by internal staff, but using materials picked up as maintenance, and they were done by a contractor in dumping overall contractor spend in 24-25.
So it's really just a classification issue.
Yeah, it's the joys of it. Because some of the, some are very clear cut and some are a little bit split between them.
You okay now?
Yeah.
My next one was just page 38 of the financials, the commentary on the 24-25 result, the adjusted operating surplus ratio. Are we happy that that explanation is?
Which page are we on?
Well, it's page 67 of the papers or 38 of the financials.
Yeah, I mean, I always find this note an interesting one. We have so much reporting separate to the financials, like I have standards. So the financials are themselves thing, and we have so much, budget reviews and budget versus actual, where we talk in depth about long-term financial plan projections and stuff. So I tend to go fairly light in the here because
I guess the financial statements aren't necessarily read by the same people who are reading the budget review. So are they?
potentially.
Anyway, it was just a question.
Yeah, no,
It's not something I'd die in the ditch over. But,
yeah,
it's a little. Well, my comment was simply details.
yeah. No, I understand. I'm an R about that as well. Like how much detail you put in this document around those. I mean, it's an interesting thing of whether these bits are actually compulsory, whether we obviously you've got to have the ratios of themselves on the pages before, but then the graphs and the explanations is sort of like an extra they added a few years ago.
I think that's extra.
Yeah, it's extra. I think you can actually pull it out if you want to, but I guess the graphs are some people like graphs. But yeah, the explanations I've sort of kept fairly light based on the other reports out about.
If everyone else is happy with that, that's fine.
I think the operating, the surplus ratio, but the adjusted one sort of like provides the transparency saying that you made 0.8, but it's actually 7.1 negative. So I think that provides transparency if someone's reading it, because some people don't actually put the adjusted one in. So that adds a bit more.
It says 7.1, but it's actually worse. Oh, 4.8.
Yeah. So it's actually the 7.1 is the underlying operating deficit. Yes, the one on the capital, the work in progress, it's gone up from
Page.
1 point. Trying to find it out.
Well, once again, the airport is alone is, so we did capitalise, but most of the airport work was done, but there were some lighting works, that were in progress as at 30th of June. So a lot of the stuff got completed in mid-June. We capitalised like 30, almost like 27 million or something, but there was 1 point something million of lighting, so that's all completed now. So yeah, it was literally that one project was
The only reason I was asking is because you wrote off 400,000 work in progress for the.
Oh yes, so
water.
we did.
So is there anything, is that, and probably that's a question for Samantha. Samantha, you're comfortable with the work in progress, it's actually work in progress and not something else that should be taken off as an auditor?
Yeah, correct. Part of our audit is we do focus on what is in capital work in progress, and we do go through it to quite a fine tooth comb. Is that the expression?
No, you didn't, Samantha.
Yeah, I can guarantee you whatever's in work in progress is current.
And just to give a little bit of context on the WIP write-off, like when we spoke about it during the year, we didn't say that it wasn't an error to put it in WIP to begin with, those items. It was just that council's priorities changed, and it got to that point in time where we said, oh, actually, I don't think these projects are going to progress with this design work, when we thought they originally had been, and we decided it was time to make it. Yeah. So that was just a bit of context that we don't think it was an error in the first place. But there's not really any others like that. Most other things are now in that WIP are things that are actually in construction phase. The airport's 1.5. Yeah, 1.5 of it. That's the one is the airport line. Yeah.
Just in relation to the audit report, there's a few audit recommendations of action that's required that actually relates to things that should be presented to the audit risk committee. Just need to make sure that that's on our actions. So pages like 102 of the papers and 103. Well, definitely 102 and potentially 103.
Oh yes, so they're all so things that are on the list. So one of them is that we do our revaluation of our irrigation assets for this year. So that work is already kicking off very shortly to get a contractor to assist with the reval process. That we need to bring back the asset accounting policy with a minor change, just to talk about how we index assets outside of the revaluation cycle. So yes, that's on the list for this year as well. And that last one is something we sort of automatically do each year, is update our asset management plans with the revaluation of the data. So all comfortable with all the items there.
I think what you're asking for is that probably don't just go on the action list for the committee, so some progress notes, so at least it doesn't get lost.
Okay.
So what I've found in the past is that they get lost,
Yeah,
the external audit ones, unless they're actually on the list somewhere.
Yep. No, I'll work with Lisette, make sure that's on the list.
Can I just ask a couple of just for clarification from my perspective? I notice waste management's gone up by a significant amount. There hasn't, as far as I'm aware, been a significant increase in waste levies, and I would have thought, if anything, there'd be at least flat activity rather than more. Has anything in particular driven that significant jump?
What page was this?
65, I think it is. 60, sorry. 60.
Whilst Grant looks for its illegal dumping costs have been higher in recent times. We also had some tyres that we had to dispose of.
Yeah, but this is commitment, so I can check through that, but it might be that we've now entered like a new longer contract for like hard waste, like our hard waste contract might have got extended. So while last year we might have had a commitment for 1 year, we might now have a commitment for 3 or 4 years. So it's so
I look at it from an environment of cost control where we're actually, operating really tight and we're running at a deficit at the moment. And we've got one category, which is a big item. It's got such a material jump. Like, I know if I can't explain levies and I can't explain a greater level of activity, are we comfortable that what we're doing is actually A, necessary and B, correct, so that we're actually just getting an appropriate balance between what we're doing versus what we need to be doing.
So that commitment, as I said, the commitment cost doesn't represent a bigger annual commitment. It represents that one of our contracts has now a longer commitment, because that can be multiple year.
So our costs aren't up or won't be up by that amount, is what you're saying?
Yeah, they're definitely not up by 1.2 million. No. That's that one of our contracts. I'd say I'll have to go and look at which one.
Could you just come back to clarify?
Yeah. Oh, definitely. Yeah, that's fine. We can find the calculations for that.
The other question I had was just in relation to the land sales. I think that's right back at page 20 odd. There was a number there which was, I think, 12.5 mil.
Yeah.
Is that a net of costs or whatever? Because I think we're saying the number's a bit higher than that in terms of what we achieved.
Yeah, I quoted 13 mil, but that was.
Yeah, but there was during the negotiations, there was one point where it jumped up a little bit when they did some surveying out at the site and they upped their value based on the square metres we agreed to. And then when an extra survey was done, there was a duplication of a small bit of the land that had been picked up in 2 bits of the parcels that we've divided into, but did drop down again. I think it dropped. So I think it originally went up 1 million and then it came back down about 400,000 before the final sale. So the amount is net, but our selling costs were not. So we've got a note 4. I'll make sure I've got. So proceeds from disposal is net of like selling costs, but they weren't massive. But I think we will. Yeah, so that 12.5 is the major land sale, the one-off. When you add that 885, that's stuff we were holding in real estate development. So you add the two together and you get sort of almost 13.5 for total land sales. But the major land sale was 12.5.
And that carrying amount of 3.1 mil was the value of that land that we sold.
That was what was on our books. Yeah.
Right.
And our auditors did actually ask about that, like seeing such a large gain. I said, obviously with our valuations of our land, they've got to be prudent with the evaluations, but also we know that the state government was probably quite generous in how we went about that process of valuing the land. I think normally when you'd sell a plot of land that big, you'd probably see a bit more of a discounting of the price. They probably kept the value per square metre similar to what some of our smaller industrial land sales are. So we had that conversation with the auditor about why it is a very big gain on disposal, but I think that was part of just the process we went through with the state government.
It was a pretty robust process.
Yeah.
Because at one stage, the state wanted to come back and suggest that some of the land was not developable, and some of it may be subject to either native title, vegetation clearances and the like, that we held the line and said, well, no, we got a valuation, that's the whole lot. You can't then just cherry pick and say, well, you want to drop the valuation because this bit you can't do something and this bit you can't do something. Overall, that's the value of the land. So we held the line and we ended up getting essentially the full amount. And as I mentioned in the tour before, a much higher value than what was previously land sales were going previously. That other 800,000 that you mentioned, grants, Laurie asked a question on the tour, what we're currently selling the industrial precinct land for. Again, during the course of the meeting, can you just flush out what the current rate is per metre? I just can't remember the number. If Jodie was online, she'd know that, but she's an apology for today.
Right here, just give me a second.
Just while you're looking, I'll keep going. Anyone got any other questions? No further questions. Okay, in that case, we'll move to the recommendation, which is on, find it now, back on page. Page 27. The recommendation sits up there. We're happy to have someone move that recommendation. Okay, thank you. Seconder, Peter? Yeah, all in favour? Okay, that one's passed.
So we're selling it for somewhere between $9 and $10 per square metre. Is what we're getting for our industrial land. So the blocks that we sold for 885,000, that was about 94,000 square metres, so around 10 hectares of land for that. So yeah, so that's roughly what we're selling, and that was based on some, when we were doing the work with the state government to value that other land, we got some valuations on industrial land, and have based our selling costs around an independent valuation.
And so what we're saying is that's an increase on what it was previously worth. Or
Yeah, definitely what we've been holding that land for 17 years since we developed it in 2007, 2008. For a long time you couldn't sell it. Now we've got a lot of interest in it. And yeah, obviously the value that we hold that at, because we did actually develop that specifically as real estate, we hold it at the development cost, and that just stays the same over time unless the values were to drop. So that's why we make decent gains on that as well. So yeah, we're comfortable that what we're selling it for is more than we were able to get a couple of years ago, but is about the right level of getting interest in sale.
The other thing, just as a sort of side, when we did the deal with the state government, we also locked in that they need to pay revenue, or rates, I should say, once they start to develop the land. They've started to develop the land, but now no longer proceeding with the hydrogen jobs plan. So they have come back and suggested that they don't want to pay rates, but we said it's contracted in. So
yeah, we'll see how that goes. They're still paid to get their first quarter, but we'll.
So it's change of funds.
Yeah, Jody's waiting on a call back from Marie about that. But yeah, I agree. We've done it in line with the contract, so no issues there.
just sorry. Just because it is a topical issue, typically councils can't charge rates on development that is for electrical and or storage. Through the contract of sale, we tied the state government into paying rates, even though under the Electricity Act, they could potentially seek an exemption.
We're probably not that much different for the Act in that we've tied them to capital value, and so you can, yeah, and that electricity thing still won't get picked up in the capital value of that land because that's how the Act's written.
Right.
So basically, what happens is the anything they add won't add to the capital value because it's counted as under the Act, it's counted as a fitting and not a part of the land because of when they're privatised. But we are still that's where we're actually charging rates at the moment, is where they're actually developing on their land the electricity pylons. But yeah, probably won't get picked up in there because we've still tied it to the BG's capital value. But do you want to have a session with the auditors without us present?
Do we need something like that? Yes, we could.
Yeah.
If that's okay.
We'll start recording.
Basically, they were quite positive in their feedback on the controls work and the set of reports that everyone's put together. So we should just acknowledge thank you and well done to the administration for the work they've done putting the accounts together.
Well, let's ask one question, just because now the administration with the have you gone to tender for your new auditors yet?
Yeah, so we make sure that we have it on board before
Oh, that's
July,
right.
so yeah, look out and
Okay,
having on board.
that's right.
Yeah.
There's some councils that haven't done that, so.
No,
so
I think there's something the other day that had.
because the act says that you need to have an auditor, so.
Yes.
So we can, when, like, they've just finished their assignment, you've got to have another one.
That's right.
Yeah, that's right.
Yeah.
Thank you.
All right, let's get back into the meeting. Agenda item 2.2. The results. But do you want to talk through this, Justin or Grant?
Get Grant to talk to it in the first instance, and then I'll respond to any other questions.
Yes, so obviously you can see from the report, our financial results are worse than our budget position. We knew that some of that was coming because at the start of last year, before when we did last year's budget, we made the election at the time through discussions not to sort of downgrade our estimates of airport revenue, which in hindsight was probably a bad choice. And so we've now, as you know, last year we did quite a lot of work on our projections for the airport income, and that is now a lot more prudent in its projections, and we expect the airport to actually run a lot closer to budget than it has over the last couple of years. So I guess that's one, in terms of actually meeting budget, that's one key area that we've put in place. There were a few items that came in at year end that were completely unexpected. For instance, when we revalued our landfill provision after 5 years, we just worked out that some of the unit rates for the capping that we've still got to do and that sort of thing were a little bit low. So we'd index them over time from the last time we had an independent review of that. But yeah, just some of those were a little bit low, even based on some contracts that we've got now. We can see that the prices are a bit higher. So that was like about a $200,000 hit at year end for just revaluing that item up. We know that during the year there was some other things. So when we've got our stormwater review in last year, the unit rates of our stormwater assets went up 80%, something crazy because due to concrete costs, and so our depreciation went up about sort of 40% or so with some useful life adjustments. So that was a $200,000 hit to our result as well. And there's the things that we've got budget pressure from that we know about that we're trying to manage, and also find additional revenue to cover some of those cost pressures. Things like waste, which is particularly around hard waste and illegal littering, is a big thing, cost for the city that we're struggling to manage the cost of. Legal fees, we seem to have a lot of stuff happening all the time here in Whyalla. It's never a time when we don't need someone giving us advice on something, so that's a cost pressure for us as well. And I think and IT is a bit of a cost pressure as well, just with it always seems to be onward marching and expectations around what systems you have and what software you have. So there's lots of items that are putting cost pressure on, and I mean, over the last few years, the one that's, the airport we know is an ongoing, has always been putting pressure on our budget, but depreciation, just waiting for the year when we get through a revaluation and we don't have unit rate increases. We'll get there one day. So that's just it's just one of those hard ones that is just constant pressure on the budget from depreciation. Probably had $750,000 increase in depreciation of our budget in 3 years, which is hard to manage. So happy to chat through anything in the report and other items.
I guess from my perspective, there was a lot of deja vu in this every year for 3 years that I've been here. Budget is here, outcome is here, and it's constant. So when you look at it, I mean, I was listening to them, and you go, we always have lots of legal fees, pressures. We have waste costs again. I mean, depreciation obviously is a killer, and you've got to work out rather than just say, well, depreciation is a killer, and do something. It's like, well, how can we get rid of some assets that will reduce our depreciation costs, or what could we do? But it's almost like it's business as usual. That will set a budget, and then we won't meet it by a lot, and that's not sustainable. I mean, there has to be some decisions taken which are, we're actually not going to keep going in this way. Now that's difficult decisions, and it's not easy. And obviously, we're living in the lovely optimistic land of the government's going to come along and build their hydrogen thingy, and all will be well with the world, but they haven't. And how long can you survive with this scenario? So, I don't love, saying, okay, we don't have to recommend anything here, do we? That we recommend the financial results. The financial results are what they are, but the issue I have is that it's almost business as usual to set a budget and not meet it by a lot. And the reasons are generally the same in just different focuses, but they're basically the same. It's business as usual, not to meet budget, and that's not sustainable. Don't have an answer there. Certainly have concerns. The answer is that some decisions have to be actually taken instead of living in a land of optimism. In fact, it's not your decisions at all. Yes, that's my general comment.
Taking that there's a whole list of things here that add up to 1.3 million. Is this year's budget reflective of those issues from this year's budget, next year's budget? So this year's budget is in 25-26. Have you already allowed for those things? So, or do you need to do that at BR1? I'm just trying to think about being upfront rather than later. So you know there's things happening, and you know that, let's say, there's certain assumptions. Do it at the beginning of the year because it gives you at least a chance by the end of the year to actually make some sort of discussions on trying to come in on budget.
Yeah, look, so the airport has been airport budget completely rejigged. Definitely the depreciation is picked up straight away as soon as it comes through. So that's all fed through, although now got some extra budget pressures of depreciation is seen in the budget review from the next asset class. Some of the other ones not fully, we'll pick them up through budget reviews. We have got some, I've only just found out this about our grants commission revenue is starting to bounce back as we have been seeing over the last couple of years. So that will help with offset some, and that's our ongoing allocations have gone up, which is a recovery from the massive reductions we had in that income over the last 10 years, 10 years before that. So we do have some offsets for some of the pressures in the current year that we pick up through budget reviews.
But I mean, Roberto, for your information, one of the things that we have pushed for and got in the past is we want a list of the things, we want you to identify a list of the things that you will stop spending on because you're not going to make budget. Seem to have come through.
I mean, it's interesting. The last sentence on 112, I think, is a frustration, Grant. Surely a point needs to be reached where depreciation increase normalise, which will make managing the budget slightly easier.
Yeah, I mean, it is extremely frustrating to every year because you can't do your budget for 20-30% increases in depreciation because we index everything every year. We plan for that, and then you get to your reval. It's crazy. I don't know. I'd get managing the budget.
So how much depreciation do we pay on this building?
Zero. This is a renter building.
How much rent do we pay?
$1.
So why would we be thinking about spending 15, 20, $30 million on another asset to develop our own centre to then go and incur more depreciation as we go forward. So what I'm trying to say with that point is maybe we're at a point where we are operationally just not going to make a call that we're going to bump rates up by a certain amount. We're not confident that there's other streams of revenue coming in to, you know, from wherever to actually offset it within that time frame. And we may have other costs that come in. So strategically, we need to think about what are some of the things that we can do to not continue to do the same thing and incur those same costs and end up where we are. Because, you know, maybe that might be the case in 3, 4, 5 years' time when, you know, a lot of these developments come through, the steelworks back up and running, we've got all the power stuff and we can do all of that and it sits forward. But if we just keep thinking that we're only here for a year and whatever, maybe the situation is today, we can actually only afford to be here. We can't afford to go into something where we're putting on more costs. And maybe part of the program and sort of what we were talking about is where are things that we can actually look at reducing our cost base to help us to do what we want to do more of. And that's more a strategic discussion that we should be having around how we're actually best using our money and what we're actually getting out of it. So that's probably where we want to talk about it. And it comes back to things like, and you know, I hate to go back to the same story again, but you know, the childcare centre, if we know we're going to have an asset that's not going to produce a return for us, there comes a point where we've either got to make a call or we've got to put rates up. And they're the choices. But to continue to have the same story year after year after year is you know, it's more an indictment on us than something else. And that's probably where you know, we're certainly keen to make sure that those messages are received loud and clear.
And just I have put into this report later. I think that is like something over the next couple of years we need to have some clear conversations with council around reviewing what our rate increases are. We've managed to bring the projected rate increases down a fair way. Maybe they need to pop back up a little bit. Maybe not where I'm not saying they need to go back up to 1.6% above CPI each year, but we've got it down to 0.7. You know, maybe over the next few years at least we need to start doing it a little bit higher to address some things, but while we're addressing on the other side as well. I think it's definitely a conversation we have to have through the next few budget cycles.
But it's not just about rates going up or not going up. It's about the way the organisation thinks about its budget and what it can afford to do and can't afford to do, and what it's smart to do and not smart to do. And you know, yeah, it's smart to sit in a building that is purposeful for $1 and doesn't cost any depreciation than it is to go and spend millions of dollars that you don't have.
I don't know if you've got particular views or thoughts on that, but that's just you know, it's something we've spoken about for a long time now, that we just see that the urgency is increasing, especially when you get a result like last year. If we didn't have a sale of land or a big grant for an airport last year, this is diabolical. And so how do we actually make sure we're actually looking at these things?
What's interesting as well is that when we went around today, so we're actually increasing service levels. So we're actually making a call to increase service levels for the community, which is good. But even like getting grants for things, the more grants you get, it's fantastic. But then you're building an asset or you're doing something that you're depreciating. So you'll have to then replace it. So you're actually increasing your cost base every single time. And that's what I see as being not sustainable. Unless you get another, and it shouldn't be just rates, it's the whole thing about understanding what the community needs are, what they're prepared to pay, but also the service levels, and being quite open, saying that discussion needs to happen. Because and not, you know, I think some of the things we went around today are great, Justin, but I'm thinking, well, you know, it's 15 million there, 30 million there, 20 million there. You go, well, what is the strategy? What is the long-term financial plan? It's actually built in there. What's affordable, but also look at things like childcare centres, the airport itself. They're all not making money, so therefore you've got to actually, the only basis you get is through, you try to get through rates, but then you say, I'll try to get it through grants, but then the grants come in and you've got to increase your cost base again. It's quite difficult.
Yeah. So yeah, if you look at the agenda items for our workshop today, it goes to this conversation. If you look at the items, we got the childcare centre, we got development opportunities around the Foreshore Marina. We got Bevan Crescent as a potential development site. The airport, which we'll round back to, Steelworks is sort of the anchor for everything. So a lot of those conversations around how we might be able to increase revenue, future revenue, or unlock more revenue. To your point, how do we reduce our overall spend? Short answer is we need to reduce the number of services or service standards. The only increase in service level that we've made or making is the foreshore open space development, which won't generate any income, and the surf life saving / South Whyalla football facility, which we've have basically said council will not commit money to that unless we get an operating return to enable that building to be maintained over a period of time. So it's taken a lot of pushing and shoving, but we've got to a point where that won't be a direct cost to that development won't be a direct cost. In terms of a future home across the road for the civic building, it's early days, but the stream one is around coming up with a plan, design and documentation. In my mind, I was thinking that we wouldn't own the building. We were going to be going and tenant or co-tenant a building that would be a state government asset, and we would then have a cost of rental of a space. Don't know what the cost of that rental will be, but to your point, it's going to be more than $1. Just want to quickly emphasise, whilst it's $1 rental, we do have the operating cost of maintaining the site and the like. But your point is well made. We can't go build more assets unless there's an income stream that offsets that.
I think that wasn't to be critical. I just think that there's some discussion points and some strategies around, and the council needs to be involved in that to actually have what is achievable, what isn't achievable. That's because otherwise you're going to have the same things like that. So the last 3 years you're going to have cost blowouts and you're going to not meet your budget, which is not where you want to be.
Yeah, so I think there's no doubt that we need to do a further reset. So for benefit of Roberto, a couple of years ago, with the feedback from the audit committee, we talked about a 2-stage strategic plan, and we've looking to do budget repair in terms of our financials. In the anticipation that with a hydrogen jobs plan hitting the grounds, that would stimulate other type of development, including housing, other commercial business and the like. Up until February this year, that was the plan. February turned everything upside down. I think probably in hindsight, maybe we didn't recalibrate this year's budget, to your point, Roberto, sufficiently to dial down or dial back. Sorry, where I was going. For a couple of years, the council has been in that position of saying it's now the time to push buttons or pull levers to either increase rates or reduce service levels. The last couple of years, on the sort of premises of hydrogen developments, we thought that wasn't the right time. I think now we're getting back to that new development is now 3, 4, 5 years away. And we've got to get from here to there. So I think we now need to go back and revisit some of our assumptions and work harder in terms of the overall service levels. We have got a live conversation, which I touched on in the tour, about going out to all of our lessees and talking about the fact that we can't continue to have as many buildings as a city as we collectively are trying to maintain. So we're about to rip that band-aid, and that will be a painful band-aid, but it's one that we do need to do.
Sorry, Cecilia, I'm really sorry to interrupt. Councillor Klobuchar has advised that he's left the meeting, so we currently don't have a quorum. I've just seen in the chat, so I've just messaged him and asked him to advise when he's back. So we might just need to pause for a minute because we don't have a quorum right now. Sorry.
Cool.
Yeah, I just wanted to let people know before we went any further.
Yeah.
Sorry to interrupt.
Yeah. if you look at where those budget overruns are occurring, you know, are they in areas that we could actually change the service level completely or stop delivering the service? The answer is probably not. We've got on the agenda for the workshop, the Early Learning Centre, that's sort of been seen as for some time as one that you could potentially divest yourself of. As that discussion paper indicates, it's not as simple as just saying, well, we'll just get rid of that business. Given the IR and EB arrangements we've got for staff, it's not going to be a simple exercise, but if through the discussion we have today, if there's a clear directive, although that's not a decision-making forum, but if there's a clear directive that we want to get rid of that childcare centre, then we'll proceed with doing some further work to work to that outcome, noting that we'll have to work through all those issues that have been identified.
And I don't want to come up with answers or anything here, but that childcare centre is one for us where we've sort of looked at it. It's been on the agenda as an underperformer for a number of years, right?
Mm-hmm.
It's not going away. There's other players in the market. What we don't see is why is there no impetus to push it and to do it with what we do? And then it's like, oh, we can't because we'll have this issue and this issue and this issue. Whatever you do, there's going to be challenges and you just got to work through it. And I'm just looking through it. I mean, we were talking on the way this morning. If that rec centre is the highest visited asset that we've got and we get nothing out of it, why wouldn't we? I'm not saying it's the answer, but why wouldn't we look at saying we've got a childcare centre, we cease that operation. If there are people and we've got whoever it was, YMCA running the rec centre, you know, instead of paying a contract, get our own people and have employees in there, actually have a you know, just a different way of looking at the same challenge. If they end up going to other existing childcare centres, fine. But by just continuing to kick the can along the road and not pushing and actually trying to look at things a bit differently to get those outcomes, we're going to have the same issue forever. We're going to have the airport issue forever. We're going to have the childcare centre issue forever. We're going to have too many facilities that we can't maintain forever, and you know, no one paying adequate leases on what they're doing, and they're the issues that actually have to be tackled in some way, shape, or form. And that's the bit that we just want to make sure that, you know, instead of continuing looking at the same numbers and going we're 3% deficit, 4% deficit, 7% deficit, whatever it is, hoping for a white knight to come in, making sure we're focusing on those particular challenges and you know, hacking away one at a time to actually move that stuff forward.
Yeah, I think as of February, there's been a paradigm shift. Hoping that there's a white knight or something shiny coming. Up until February, I was 98% confident that we were getting a hydrogen jobs plan facility built here. So just for Roberto's benefit, it wasn't a whim and a dream thinking that the state government was going to come in and save us, and that a lot of stuff was going to happen. But based on hydrogen jobs plan facilities, we knew that there was a whole lot of residential development that was about to be triggered. Unfortunately, a lot of that just like that stopped because of hydrogen jobs plan stopping. So up until February, we had Bentleys coming, we had Discovery busting at the seams, wanting to build more stuff. We had EDP Group getting approvals to do apartments, Comfort Inn, approval to put more cabins in their facility. So a whole lot of activity was actually coming on the boil. So it wasn't pie in the sky. We didn't have a level of confidence that was going to happen. Unfortunately, what ended up happening with the steelworks was unforeseen, and we now have a different paradigm. So I think there's no doubt that we need to go back and recalibrate our budgeting and our long-term financial plan to factor in that things are not going to happen now in 24 months. It's probably going to be 5, 6, 8 years.
There's probably a few income streams that are now becoming, and they're not huge, but they're, you know, we are starting to see, like we did actually see rates growth last financial cycle, and so our plan does build in 0 rates growth across the time. So I think not that it's necessarily the time to pull the trigger and build in lots of growth across the plan. I think we will get rates growth happening each year. So that's, growth from new ratepayers as opposed to pursuing on to existing ratepayers. So I think we got, where we've had close to zero for a long time, we had about 0.5% last year, which does add up. We haven't built in that there's obviously some, just while we're having the conversations around it, we haven't built in the income, the rates, ex gratia rates from the land sale. Just until maybe we'll get that first payment, then I'll build that in. And then we've even had a bit of non-rateable land out past the industrial estate that is now handed over to private ownership. That, that's like an extra 10 or 15 grand of rates that have just suddenly come in that we weren't expecting. There are little things like that starting to happen as well. So there are some, it's not the possibility of positive things for the plan. There's actually a few things that are actually happening that we haven't built into the plan yet.
Also, just for information at this point in time, don't know what the outcome will be, but we have engaged the state governments in relation to the payment made in lieu of rates by the steelworks. We believe they under contribute to council in the order of 300,000 to 400,000 per annum. State governments sort of doing what state government does. They've sort of agreed that they that it's an issue, but they don't want to discourage any future owner from purchasing the steelworks, which is really bizarre because it's 5/5 the overall from a steelworks perspective when you think about some of those numbers I quoted in terms of their operating losses. But the state government have informed us that they are rolling that into the indenture agreement, so it'll be in legislation as opposed to sitting outside the legislation, which was been the case since the early 2000s. At least it will be part of the negotiation and part of the transaction that occurs. And at some stage, we expect / hope, or the former, that we can talk about what the quantum is in addition to locking that in legislation.
Peter, is Peter on?
Mm-hmm.
Yeah.
Yeah.
Can we just then, in that case, noting the comments, move to the recommendation? And maybe just, I'd certainly be keen to have a amendment, just noting, make sure the message going back to council, noting the audit committee's strong preference for more focused decision making. And I'm not sure how to avoid this, so help me, my fellow committee members. Just some stronger decision making that will help achieve financial sustainability, and maybe something around the lines of revisiting the long-term financial plan to actually do that. Because at the end of the day, if we're not getting them, and I do like the fact that it's in capitals because it's
Well, that's how I know Sorry, I'm not yelling at you.
we're happy to yell as much as we can with this message. I mean,
Sorry.
that's really what we want to get across, the point that to be doing more of the same and thinking that we're going to get a different result, it's just not going to happen. We really want to make sure that there's some clarity there around just being a bit more lateral with how we think about solving some of the challenges we've got and the importance of doing it. I'm not sure if
Yeah, I'm happy with that change. I actually was also thinking I didn't necessarily want to recommend the financial results be compared with the whatever and presented. I'd just I would just note that they're being presented.
You notice that they have reviewed, because in theory that your
Yeah,
thing is to note that you've reviewed it before
Yeah.
council do.
Yeah.
Yeah.
Okay.
The order of notes.
We just have to note that
Have reviewed. And then after financial results should be that will be presented to council instead of. So after results on the third line.
Oh, yeah.
So that will be presented to council because otherwise it doesn't read.
Here.
Yeah. Presented. Yeah. And then get rid of it. Get rid of be presented to council in the fourth line because that read it makes more sense than that when you do it that way. Yeah.
Remember that? Yeah, have a mover. Yeah, thanks, Pat. Second, Peter. All in favour? Thank you. Okay, we should hopefully move on a bit quicker on a couple of these other ones, but agenda item 2.3, page 127. Still with you, Grant?
Yeah, still with me. Obviously, this is the first quarter budget review. It was primarily to pick up the impacts of year-end, any retiming of capital expenditure budgets, and any other items that are flowing through. So the big item really is depreciation. We've done buildings and open space, and they once again have had a bit of an increase. But what can sometimes happen with these over these next 12 months? I'm happy to go back and review. I think both the stormwater probably needs a bit of a review now outside of the normal cycle, just an internal one, and we can discuss with the contractor Tonkins that we used to assist with these processes, and even looking at some of these and whether sometimes when you've had a bit of time to sit and look with it, whether it does need a bit of a review of some useful lives or any other items that sit within here. Because when you look at the data, sometimes it doesn't all make sense together. We have done that over the last couple of years. Last time we did our building one, we did do a bit of a review of some useful lives after that process. And similarly with our transport one, and managed to get some adjustments that everyone agreed to made sense. That brought depreciation down a little bit. So, but yeah, it's a challenge. That's the main flow through of the long-term financial plan impact for the end of the year. Everything else is sort of just retiming. So we didn't get some LRCI funding in the end of last year. That's just flowing through in this year instead because of the timing of when they decided to pay those. And then, yeah, I mean, the carry forwards are an interesting one this year with the airport project coming in, a $30 million project, which we've never delivered before. Did have a bit of an impact on some of our capital program delivery. I know that our capital project team are putting this, getting some more resources put into there, and there's a lot of planning going into the largest of projects we've got. So I think we'll get a better outcome this year in terms of delivery. Look, there might be some, for instance, we've got the budgeted amount for the Flag Plaza budgeted this year. Some of that will probably end up flowing over into the year after. It is a big project that multi-year. Our plan in terms of assuming like our cash flow does already actually have an assumption that we'll have sort of at least 4 million flow over to the next year in terms of cash flow for capital. So while the figure is looking quite large there for this year with some of the big projects we've got in there, it's the plan already assumes that some of that will flow out for delivery into the year after. But the plan is the capital program is still very large, and some of that will probably have to be moved out. I will just note when you look at the overall result for this year, I'll remind something that we included in the original budget. There's 950,000 in the operating budget for dredging of our marinas, which is a one-off item, which obviously affects our underlying result. It's fairly capital in nature, but can't be capitalised. So when you're looking at the overall deficit, there is 950,000 in there for dredging. Yeah, but nothing else for me to comment on right now, other than happy to answer any questions.
Peter, anything from you?
No, all good from me, thanks.
With the airport, the depreciation again, it's deteriorated. Is that because you didn't allow for depreciation of the new runway?
Oh, we did. We had quite a large amount built in. It's just that once we've finally got the detailed componentization, it came out a little bit higher than we were expecting. Probably also, I think we assumed a little bit more of it. It's actually a little bit further along than we were expecting, so a tiny bit of it's timing. But yeah, no, when we componentized it, it just turned out a little bit different to what we estimated at a high level.
That is my inclination. Would be that more needs to be done in the budget review to offset the deterioration that has arisen as a result of last week's results. No, we can stop now and decide what it is we can do in the next 9 months. That would actually have us meeting the original budget, which wasn't brilliant to start with, rather than just say, oh, it just be more. And again, I'm back to, it's almost like where business as usual is a loss increased above budget every year, and there's no change of. So that would be my recommendation.
Yeah, mine was very much along the same lines. I would have thought if I'm putting something like this to council, that as the very least there would be something in there talking about remediation or rectification, what we're going to actually do about it, and what options we've got to do about it. So, you know, I would hope that unless there's a particularly compelling reason why we should be adding a point to it, which talks about steps that the administration either recommends or will be taking to help to offset the position for the remainder of the year. Any thoughts there, Justin?
Yeah, accept the that suggestion. We haven't done that yet, but I agree that we need to put some extra words in the report to go to council to that effect.
Again, I wouldn't necessarily recommend the budget review as is. I would note that this budget review is going to council and has been reviewed by us, and our recommendation is that remediation or rectification considerations, you know, be looked at to ensure that the budget as set can be met in the financial year.
You okay with that? Did that make sense?
Probably not, because it was spewed out of the mouth.
That's okay. So we're noting the budget review, order and this committee note the budget review
Is to be submitted to council.
incorporating the financial.
That is,
Yeah, that will be submitted to council.
That will be
adoption. Yeah.
yeah.
That will be submitted. Yeah.
And some extra words.
So a new point.
Well, then you've got recommend. Oh, that's the business plan. Yeah. Well, yeah, and some additional words.
Yeah. If you want, you can still make the second one notes that the end of his plan and budget will be amended to reflect the variation.
Yeah.
Notes.
Uh-huh.
Just have to add will after the word plan on the second line.
Uh-huh.
3, the committee recommends that the council.
Management and council, or management presents to council
So
some alternative options to address the deficit or shortfall.
Mhm.
okay.
Happy with that? Yeah. Happy to move that back. Yeah. Peter, happy to second that?
Yep, I'm happy.
Thank you. Moving on to 2.4 investment and loan performance. Just for noting. So we'll quickly just run through that.
Any questions?
Anybody have any questions on that at all? Straightforward. We're happy to move to the recommendation then. Peter, have you got anything on that?
No,
That's all good. Okay, we can note that one. That's straightforward. Good. Thank you. And I have a mover on that. Thanks, Pat. Peter, second. All in favour? Right, 2.5. Page 153. Just I might, is it still growing or yourself?
Yeah, it's still growing.
Yeah, so just getting in front of this one and just putting in front of the audit committee the proposed, I guess, process, the parameters around setting the budget. I think obviously taking into account some of the previous feedback from the other items as well. The parameters are fairly consistent with we've had previously. The process itself for where we do certain processes starting in December internally with elected members in sort of February, March, consultation, on committee in April, and then consultation around April, May, adoption in June is our normal process. But yeah, happy to take any feedback, any extra steps, thoughts around the overall process. Yeah.
I don't have any problems with the process per se.
Just the detail.
Yeah.
No.
The only thing I had was one of the review existing services and assets to ensure they meet prioritised community needs. That's one of the things I said is how you can do it.
So that's one of the ones we have to bring back to audit committee, I think in Feb. So obviously we did previously have BDO undertaking service reviews for us. We weren't sort of happy with what they were delivering and providing. So now we need to look at our steps. We had a conversation the other week whether we, when we originally appointed BDO, who we've kept as our internal auditor, because that's the sort of thing that do that quite well. Whether we, we had two other companies at that time, so we worked with recently and probably actually deliver a bit of a better outcome from a service review type model. So whether we go back to them and get updated quotes, or that might be one of the options to look to get that rolling along again. They've got budget available for service reviews. It's just finding the model that works. We did have a bit of a discussion around whether there's some other councils out there that assist from a a little bit more of a council focus, but there's not many councils that have a large service review capacity internally.
Yeah, my only comment was just making sure that through those parameters, we make sure that the services that we provide are consistent with our budget capability. That the fees that we actually apply for our services actually reflect the nature of the services provided. They're the two as sort of parameters, and if they're going to be different to that, they should be highlighted and discussed as taking a deliberate position to go outside of those parameters, because I think they're the two areas I think that stand out.
Yeah, so you could almost, where we've got a review of existing services and assets to ensure they meet prioritised community need, you could almost add and affordability, council affordability.
Correct.
And then a separate one potentially around funding models outside rates, like user charge fees are set at.
The cost of providing the services are actually reflected in the charges provided, unless expressly overridden by council or whatever.
Yep.
Community service obligations.
Yeah. Because I'm not sure, and I may be wrong, whether everyone fully understands the implications of some of the decisions that we're taking that they're having on our long-term affordability. So I just would like to make sure that we keep that front of mind at this point in time.
Yeah, we've probably picked that up in the thing. So maybe incorporating the following suggested changes to parameters. So the suggestions.
That's right.
Changes to parameter.
You could say, yeah, services. Reference, affordability. Yeah, council, and then an additional parameter.
Fees or
User
recovery.
charges, user
Yeah,
charges,
it's
yeah,
reflect cost of services.
Yeah,
Unless
reflect.
expressly, determined otherwise by council.
Yep. Yeah.
Happy to do with that. Go to you again, Pat. Peter, any other comments from you, Peter?
None from me, thanks.
Are you happy to second that?
Yep.
All in favour? 2.6, schedule of meetings. We're all comfortable with those?
Check with David Powell, is that those dates work for him?
We can always, I mean, if we get to the first meeting of the year and there's one that's a particular thing that the committee can always move it. So I think that's a good.
So we provisionally set that unless specifically.
Yeah. Yeah, like you said it, and then yeah, you can always pass a resolution to move one of the meetings later in the year if someone notices that it's a problem.
Okay. You're happy at the moment? Yep. Peter's happy. Everyone's happy with that. I might just get Peter. Can you move that one?
Yeah, I'll move it.
Yeah, I'll second it. Thank you. All in favour? Work plan for the next 12 months, 163. What's that? It's you. As the author.
No, it's a product of work. Was that pulled together? But basically, the work program looks at all the things that the terms of reference and the Act requires the audit committee to turn its attention to during the course of the year. It's largely a repeat of the year that's just been gone, picking up the review of all the policies, procedures, input regarding budget process, review of financial statements and the like. So we think it's a pretty comprehensive work program that I think has served us well for the last year or two. So it's only if there's anything additional or any variations that your community want to the work program.
Just on that, could I ask that we maybe move this particular item forward to the next meeting or defer it to the next meeting? Because it'd be good to have David also have a look through it and give his 5 cents worth. So we just run that as a separate item.
Yeah, sure. In which case we don't need to move it a second, we can just leave it. Just go over the top of it and we'll just bring it back to the next meeting.
Yep. Our annual report to council. Next item, agenda item.
Yep, so the Audit and Risk Committee were asked to complete an audit, complete a survey. These are the results that have come from that. Just seeking.
No, that's the next
Oh,
one.
sorry.
This is just the annual report. So,
right.
It's
Yeah.
pulled together from the work program.
Yeah.
Mainly, and the comments. So I think we just normally last year I think we saw like the chair just a paragraph to add at the end.
Okay.
I think yeah. So most of this is like just the work that the committee's actually done.
Yeah, sorry.
And then yeah, just the chair to sort of provide an overall
Some-
high level
Yeah.
thoughts of the committee. So
I'm not sure if you're available, Laurie, and whether this is something you want to do, but last year we also had Grant Strawbridge actually do a dedication presentation to the council.
Yeah,
Did that via Teams, and that was Grant's opportunity on behalf of the audit committee to share some of the feedback directly with the council group. So if you're amenable to that,
do that. What date's that?
20th of October.
So that's like 5:30 p.m.
5:45.
5:45, of course. Yeah, so it'd probably be about 6ish. So you normally do it.
Yeah, that's right.
Just
Do a meeting invite for that.
Okay, so in that case, do we need to move that one?
Yeah, so the way we've worded it is that you can just the report, Loris, that allows you to sort of give that paragraph to add into this.
Yeah. I was comfortable with the content, but do you have any comments on the content?
No, I was comfortable with content. You can always, add your paragraph at the end about, continued concern.
Peter, do you have any comments on it? You're happy with
No,
that?
all good, thanks.
In that case, we'll have a Pat and move that. Yeah, Peter second, all in favour? Done. Right, our survey.
Your survey. So these are the results that have been collated as a result of the survey that the Audit and Risk Committee and the elected members completed.
Difficult to split out
Groups
which
up.
groups are saying what,
Yeah.
so that made it slightly less helpful than it might otherwise.
Okay.
Because if you've got, council member, elected member group all having a view, or a management group or a committee or all having one view.
Yeah.
It slightly changes how you perceive what's being said.
Yeah, in the past, we used to separate it out, so you at least tag your elected member or a independent or staff.
And I think some of them I went, well, I wasn't sure that it was an accurate perception. More direction could be provided to council. I mean, we're an independent audit and risk committee who,
Provide advice.
provide advice. We don't provide direction. We've provided advice on a number of occasions, specific advice, and then often we've not seen that advice dealt with in any positive way or not dealt with. Just nothing's happened.
Yeah.
So some of that I found concerning because to me it showed a lack of understanding by potentially an elected member. I hope that that's who it was, as opposed to about some of the things. Wasn't surprising in some respects. I've got lots of yellows, but I mean even things like commitment to travelling to Whyalla for a meeting. Well, we've all been happy to travel to Whyalla for a meeting, but the decision was made that it was more cost effective not to. And so that was a cost effective thing.
And whether it's maybe that's part of it, is finding that balance. And
yeah.
maybe if we do, maybe instead of one meeting in Whyalla, we need to do two, and I think because one of the comments, and I think I assume it was from an elected member, was around maybe like an extra workshop, like maybe instead of doing one joint workshop a year, maybe a second joint workshop. I think they do take a lot. They probably take a lot from those joint workshops where they can actually ask questions direct from the group of them. Yeah.
And then there was by attending monthly elected council meetings in person at least 3 times a year. Well, we're not part of a council, we're independent audit committee. The reason we have a member of council on our committee is so that the member of council can provide that liaison between the council and the committee. It shouldn't be that every committee meeting member is attending council meeting. So I think there's a little bit of maybe understanding of the role.
We're going to apologise in advance because I think we're going to be a bit light on with elected members at the joint workshop following this meeting. But the purpose of the joint workshop was actually to get the audit committee members and the councillors in the same room to be able to have some of that conversation, because equally we've had some elected members, actually no, I think it was the other way around. I think we've had a perception from some audit committee members that you're not having the influence on the council members, so you're not getting your message through to the council. And then I've got elected members that have said, well, we being the council are not hearing or giving due regard to the audit committee. Yes, I know that all of the information that we've been provided by the audit committee is presented to council, and you know, we've had those discussions. We've changed our strategic plan. We have amended our long-term financial plan. We've changed some of our assumptions regarding the airport, all based on feedback that we've got from the audit committee. So I'm confident that there is a two-way flow of information, but I think both sides maybe don't feel like that information is getting through.
Can I suggest on this one, again, in relation to the recommendations, that for recommendation number 2, rather than identifying the following areas for improvement in committee operations for the next 12 months, we actually have a session with the new audit committee members and either the council representative of audit committee or councillors, where we actually run through this particular paper and just workshop things that we may or may not want to change going forward. If that makes sense. And that gives everyone the opportunity to have some input, fresh input, and and then try to address it that way. Because otherwise, you know, I certainly, if David's about to come on board, I've had to go and make a whole lot of suggestions without giving him at least an opportunity to talk. And Roberto, you've been here for 2 seconds, so
Thanks, mate. One of the things I took out of it was everything dropped from the previous year.
Well, it's interesting, like somebody obviously was somewhat agreed
I'm saying it's just,
against everything.
So, so it just seems that there was a drop, and so that to me always means that there's something, someone's had to put something in that has to stabilise the amount. But some of the things in here I think are worth discussing. Probably is what the committee can actually do, and what actual things it can't do under its terms. So I think it's worth having that. So
yeah. Okay. Are we happy with that?
Do you want that instead of the current number 2?
Yeah.
Yeah.
We don't need number
Yeah.
2. That's review number 2. All right. Peter, are you happy to move that?
Yeah, happy to move.
I'll second. Yeah. All in favour? Thank you. The committee's terms of reference, 217.
Yeah, similar to the work program, pretty much just the previous terms of reference, just as part of the annual work program, reviewing them to make sure they're still relevant. I think there was only some minor changes.
Yes, just some minor changes. Yeah.
Filing and stuff. So essentially, no substantive change to the terms of reference as has been operating for some time.
Anybody have any questions or queries or suggestions that we should do anything different? No. I'll take silence as acceptance. Yeah, I'm the same. I was all good with that. So we've moved to recommendation. Pat, thank you. Peter, second.
Yeah.
All in favour? You. Next general item, 225.
So council were to submit to the Audit and Risk Committee an overview of the risk management, business continuity and emergency management planning. We deferred that until October. So this report has brought together a review of the risk management frameworks, review of the business continuity plan. And as previously committed, we have looked through our emergency management planning to amalgamate our business continuity planning into one schedule. So what has been put forward is an overview of that, and to seek the Audit and Risk Committee's recommendation to move to the next steps of endorsement for the risk management frameworks and the business continuity plan. Also noting that per our processes, that these documents are also out for consultation with the organisation at this point.
So in that case, do we have anything that we can, or it's just more an input feedback?
It's more your feedback. So your recommendation as Audit and Risk, that I guess we've met the requirements of having reviewed this, and if you've picked up anything or have any feedback to our risk management frameworks, BCP or the amalgamated schedule, that you share that, and I can take that back.
Okay, I might just open it up for any general comments or questions that members may have.
Yes, page 237, just under authority, you've got the VCP plan will be reviewed and approved by the Audit and Risk Committee. You don't actually approve
Yeah.
it, and the
Yeah.
council does.
Yeah.
So I just
Yeah.
changed that
Sure.
wording
Yeah.
somewhat to make it clearer. And then bottom of page 239. I don't think the paragraphs of the sentence that's there fits there.
Bottom of 239. Yeah, my apologies. I think this was, I've moved quite a lot around in this before I submitted it. I think this is the statement, when media communications. So I'll note
Yes,
that and
I
certainly
think
go
so,
back. Yeah,
but I
thank
think
you.
it doesn't belong there.
Yeah, perfect.
The next page just says a small BCP kit should be considered for all managers. Didn't really say what should be in the kit, but I don't know that you need to. Just noticed it. And then I wondered, page 242, you've got steps in developing a BCP, including blah, blah, blah. Does that all need to be in there? Like,
I guess it can be removed or it could be put in the appendix as such, but I suppose what we're really trying to highlight is the framework. So if I'm not here in future times, how that's addressed, but I certainly can take a comment to remove it.
it just because this is actually the business continuity plan, and you got in the business continuity plan, this is how you do the business continuity plan. So
Sure.
if you're going to have it,
Yeah.
I'd probably
In a procedure or something
Yeah,
like that.
sure.
procedure.
Yeah,
Or
noted.
something. It just felt like a bit circular.
Okay, sure.
I'd have to say though, to say that otherwise, I thought it was actually quite a good document.
Thank you. I was expecting some holding your breath. I have.
Wait a minute, you haven't had all.
Oh, okay.
That was just me. I don't
Oh.
count.
Right, I had a couple of things, just in
Sure.
terms of the control centre, you've got,
Yeah.
you got the 1 and 2, which is the civic building or library.
Yeah.
Yeah, what happens if both of them are out?
Yeah,
So I think in that,
Yeah.
within the document, it talks about something else, having another spot, but
Yes.
it doesn't actually say it there.
yeah. So there's some elements that definitely need to be worked through still, because that's a completely valid point.
And just some of the overall business function, criticality, I thought some of them, even the things like procurement, less than 10 days, well, if you can't, you know, if it talks about tenders and things like that, you'd go, well, you just go out and get it. You need, it's an emergency, you need to get it, you get it, and worry about the exemptions later.
Mm.
Things of that nature, so.
Sure.
So some of those could be, depending on what the actual, why you need to do it, like if there's a disaster, what do you, those criticalities are, do they, payroll, I can understand, but some of them I think, well, can they go out a bit further? Just means you
Sure.
flex.
Yeah.
Otherwise, like I said, it's your normal business continuity plans, a template that's used, and I think that we populated it, so I think it's a framework, it works.
Yeah, thank you.
Anything from you, Peter?
Nothing further.
My question was, I agree, it's actually, it's a good document, but how do we make sure that this is actually understood across the business?
Yeah, absolutely. So last year, I remember reporting into Audit and Risk that we'd undertaken a risk maturity roadmap.
Yeah.
With clearest folding, and some of those things were identified about ensuring documents are consulted on well and implemented. So getting the buy-in of people managers, also repositories. So we have already taken an action to put it in a public, like our P drive, so that it's accessible. Previously, risk management hasn't had accessibility to it. Sky Trust can also be something everyone has access to that can access it. And so the test individual as well is going to, I guess, train our staff in how to respond. Noting that I don't understand that we've had BCP testing. for some time. So we're going to be learning as we go.
Yeah, probably COVID comes.
Yeah, and if I can add to that, CEO has got a very clear KPI that we need to test these plans this financial year. I can't bring it up quickly, but I think we're scheduled February, March to do the testing.
Yeah.
How'd it go last year?
We didn't do it last year.
Yeah.
So this will be the first time that will be.
Yeah.
the
First
full
time
one.
it's amalgamated. Emergency management has been very consistently done,
Yeah.
just not the BCP. So that I guess that's the point of the amalgamation, and then reporting back to you biannually on the progress of that.
We got to the risk management framework, just a couple of issues on the table. Say if you go to page 320.
Or what page?
327.
Sure.
Just when you look at some of the, it's just a tidying up thing, but I noticed that you go from minor, for example, its annual staff turnover of 8%, moderate annual staff turnover greater than 9%, major annual staff turnover of greater than 10%. There's not really a lot of differences there, and in fact the 9% is 9% of the work group, but the others don't have any reference to work groups. So I just maybe get you to just have another look at those to see that they make sense.
Sure.
And even little things like financial loss, you've got 1.5% to 3.5% is in one group, 3.5% to 7.5% is another group. You should never have the same number in both groups because then it fits in both groups. Okay. So just minor things like that.
Yeah. Noted. Thank you.
The risk management framework, and also you've got strategic risks which are great that come to the audit risk committee biannually. But under the operational risks, I just think that sometimes you can have some operational risks that are extreme or high.
Yeah.
They should actually be reported through the AOR as well.
Yeah.
Just from my viewpoint.
Yeah, that we actually have operational risk workshops occurring in November, so we'll be able to reassess that, and I'm happy to report back in.
And the other one's just your risk management framework, the actual risk matrix. You might just want to look at that because I think one of them, a lot of people will have reduced the major possible back to high because it's some of the view is extreme. So you just have a look at that compared to some of the other ones around the place.
Yeah.
Because it just means that you get all these extremes and actually they're not as extreme as I think they are. Yeah.
Any others on paper? No? All good. No, it's a comprehensive piece of work, so well done. I'll just move the recommendation then.
Yeah, I've just put at the bottom of it that it's subject to feedback noted above, so that will be in the minutes, the feedback that we've just had there. Is that okay? Because it was quite a bit.
Yeah. Okay with that. All right. In that case, can I have a mover? Thank you. Peter, right, all in favour? Thank you. That one's passed. Okay. Now we're into items just for noting. Start off with the procurement report. You want to introduce, or we want to go straight to questions?
Happy to go to questions on this one.
Yeah.
Grant, I have a question. Just on page 339, I think it is, the Civic Park toilet says a refurbishment cost of 125K. In the past, that's cost us a lot more when we've obviously done similar work. Well, what's the difference?
Yeah, but this one's not a knockdown. So this is literally just because we're building, so as part of the Civic Park main project, we're building a new toilet near the new playground, which basically is replacing the Schultz Reserve toilet in location, because that location was less used and not as easy to monitor. So that toilet will be a similar price to the other ones we've been doing recently. So because of that, the Civic Park one, we're doing it's literally just an inside-outside refresh. So painting the outside
Okay.
and some minor works on the inside just to tidy it up, make it a lot more presentable. And that's why it is a lower price. But you can see that even that sort of work is still costing 125,000 just to do a minor refresh as opposed to a full rebuild.
So is that the toilet located over near the sound shell?
Yes, that's used.
Yep.
And we're doing that because of the work that's happening in Civic Park, to then have the toilet block that's got to be used until a new one can be established to look better, given the work that's going into Civic Park.
Yeah.
Okay, thanks.
Yeah.
I've got the 156,900 on cultural development plan and leadership development. In the current environment, I was concerned that had a procurement exemption, just given A, the amount, and B, the type of thing, and the reasons that were put in the table. I assume that exemption would have had to have been approved by the Chief Executive Officer because it's over 100,000. And then when you see the reasons for the exemption, made me feel uncomfortable that the procurement, that the policy exemption would be approved by the person who was, if you read this, insisting that that was the person who'd be employed. Just doesn't look good.
Oh, look, I'm happy to provide a report to council if need be. Just for clarity, the investment is over 3 years. It's in our full leadership cohort, so first, second, third, fourth, and emerging leaders. So it's a comprehensive piece of work. It's in line with the KPIs that have been set by the council in terms of looking at building our internal capability and capacity. And it's being done at a time where we've had some significant changeover of our executive leadership. So there's a whole lot of valid reasons for the investment. In terms of the procurement approach, we had made some inquiries from a couple of different companies. We got the fee schedule from a couple of companies, so we know that the hourly rate that's being proposed is competitive. In terms of the recommendation that come from myself, it may be seen as a potential perceived conflict of interest, but I've actually utilised this company in 2 other council areas I've worked before, so I'm highly confident that they are very credible and will deliver a good outcome, as opposed to a consultant sort of unknown or untested. So, you know, there was a number of reasons why we didn't think there was a good use going out to do requests for proposals, given that context. If the audit committee would like a report to go to council, I'm happy to provide a report to council to provide a full explanation for it, but that's the context.
Who was the company?
The company's called Rever. They're a Queensland-based company.
Okay.
And as I said, they specialise in doing this work, and because I've utilised them into former councils, I know their methodology, I know their tools, I know their capability, and I know what deliverables they deliver. And as a direct KPI, I didn't want to engage someone to undertake this piece of work with a level of uncertainty about whether that consultant would deliver the outcomes that we're seeking to achieve.
My concern was probably over the whole lot, was that there's 9 procurement exemptions in the first 2 months of the year. I think it's normally quite high. So I think you may just want to review your procurement policy and why these exemptions are coming through. Is it because of planning? It's not planned appropriately or anything like that. So I know that you use exemptions because you should, because it's an emergency, but I think it also allows for administration sometimes to be a bit not lax, but it's easy to just get an exemption and go that way because they don't want to go through a process. I think we just got to be careful that that process is appropriate. So they're not saying that any of these are inappropriate, but it's just when you have 9 in a small council, it just seems like it's either the procurement policy is actually too restrictive and needs to be reviewed, or people aren't following it.
9 is quite high. I mean, my personal view, it would be a better look if you actually were to prepare a report to council, given that you've approved the exemption.
It's more probably because of that factor as well. It's just more a good practice to follow. Can we just minute that one? Yep.
Does your procurement policy, because I haven't got a copy of it, say that the exemption has to be notified to council?
It's notified through this process, so this is the transparency of the procurement.
Because the ones I've seen normally, there's if exemption is done by the CEO for something, it comes through to the next council meeting. It's normally on the council meeting agenda.
Yeah,
This one does get put on the
quarterly. Yeah, so we do this quarterly.
separately on the council agenda, so it's not just done through the audit committee minutes. It's done as a report to council as well. And I know that there's 9 in there, but I guess the second lot are a little bit different in where sometimes you start. They're not a full exemption. We've started a process, and it might be that you've gone, oh, we've estimated it to be this much. They've still gone out and done a procurement process. They may have just got to the end and gone, oh, based on the value, we probably should have used this procurement process. So they've still tested the market. It's just being transparent and saying, well, we didn't actually, because of the end value, we didn't use the correct process. And it's getting permission. Do you want us to start the whole procurement process again, or are you happy that what we've done tested the market enough? So we report those ones. So I guess there's 6 of the ones where we've got genuine exemptions, and 3 of those process differentiation.
Thanks, Brian. Anything, Peter? Any more from you?
No, thanks.
Just for me, the balance of local versus non-local spend. We're comfortable that that's all that hand and they were needed this last period.
Ask the question again. Sorry,
The value of our non-local purchases relative to the value of our local purchases.
Yeah, what can happen in the first? So there was. I think that there's a few that may have thrown out. Like, so dredging is a big one, and the nature of dredging is there's about 1 or 2 companies around that can actually do dredging, and none of them are local. So I think often the big ones are there are a couple of big ones in there where there's no way you could have sourced it locally, and sometimes the way that this report works, sometimes in the first quarter you might pick up. So that, for instance, it's more about we pick up the spend as we sort of contract it. And first quarter, so we pick up the PO almost for like the whole spend for this security screening is a big spend as well.
Yeah. And
that gets sort of pulled into that one. So that's probably skewed a little bit. As you can see, like it's that thing of like we always spend many more of our purchases are local than non-local. It's just that some of the means that you just can't get locals to do. Skew the figures.
And we've had no issues from the community about that at all.
No, I don't think we've had anything recently where we've sort of not contracted locally where someone was expecting to get it on anything big.
The closest thing we had to what could potentially be a little bit sensitive was the work being done at the civic building, trying to put some materials up to stop the brickwork potentially falling down onto the to the street. We went out to local contractors 2, 3, 4 times, chased them, got prices that were this high because a lot of the local contractors have actually got, believe it or not, a lot of work. And we had a sense that there was probably some discussions happening between some of the local contractors about who might do the work and how much they might pay for it. In the end, we actually got an external person to do that work. at a much reduced price than what we're going to get from the local. So we did have a forum for the audit committee members' benefit. We held a forum about a month or so ago. We got all of our local contractors, suppliers in. We talked to them about the council spend for the next year, so $29 million. Everything from cleaning through to landscaping through to catering for council dinners, the full Monty, and talk to them. Part of that briefing session was one to alert locals to the opportunities. Many of our locals tend to focus on the steelworks and nothing much beyond that. So this was an opportunity for them to think beyond just the steelworks, but also to reinforce the message that we're not a cash cow as an organisation, like potentially the steelworks may be seen by some. We can't afford to pay, 3 times what we know is the value of some of the work that needs to be done just because they're locals and just because we're council. So there's a bit of subtle messaging to say, think about your community, and particularly some of the people in, that are struggling to pay their rates. Just put them front of mind when you're putting in your tender or quote to council, and don't just jack up the price just because we're council. Think about the impact that will have on the local community. So that was overall, it was a very well received forum, and I think got a fair bit of kudos from the local business community and others for holding that. Whether it translates to some better pricing going forward, only time will tell, but we're certainly giving the opportunity for locals to put, good tenders in front of us or prices, and if the more they do that, the more we can get done.
In addition to that, it was about some of our local predominantly fabricators maybe diversifying some of their operations as well. So where we're having to buy particular pieces externally, that if they were able to diversify and kind of meet local government standards, that they may have other opportunities to do more work. So it was all about how we are investing back in Whyalla, how we're investing back in the community, and in return that they don't price gouge the council. So that complete transparency about what each project was worth, and that we can't afford to go over those figures that we provided.
Yeah.
Mr. Chair, may I make a comment on that? The local and non-local spend is one of my soapbox issues that I regularly refer to on media, particularly radio, and the feedback we get when the community is aware that the majority of the spend is local, what it's on, how we make that effort to keep it local has always been good. So it's something we are continually promoting.
Yeah, 100%. I think that's great. It's exactly why the question was asked. See for it now.
Yeah, and the airport project was a classic example about the amount of money that was given back to local contractors.
Yeah, 4 million.
4
so it was
million,
even though it was obviously it's not something you can do locally, it's a very highly specialised project, but yeah, Fulton themselves actually tracked quite closely. So I think they spent about 3.4 million directly, and that was tracking all their spend locally, and then council in engaging the superintendent's representatives and stuff like that also, and project managers spent about 600,000 directly.
That's right. Okay, we'll just move to the recommendation then. Someone move that. Have we received that before?
Yeah, do we need to note that the CEO will prepare a report to council in relation to?
I'll put that in the business arising section, if that's okay. So
Okay.
separate action, business arising.
Okay. And we'll have a Pat, thank you. Peter, second.
Yeah.
Thank you. 3.2.
So work health safety annual reporting. So as part of the CEO's KPIs, I'm required to report on the annual plan. So I put background in there of what the annual plan is. So it's a strategically informed plan which focuses on areas we'd like to improve in the work health safety space. It's monitored by local government risk services. So that was part one, getting you to acknowledge that we have planned for this plan. And part two was putting to you that these metrics are going to come in to you. What else do you want to see, if anything, about work health safety metrics? Listed in the table, we have got a commitment to providing you workers' compensation claims, lost time injuries, and LTI days. But is there anything specifically the committee would like to see?
Do you measure frequency rates?
We don't measure hours, which makes it very difficult to go into that level. But we can provide other elements like first aid to injuries. There's some other mechanisms. MTIs.
Yeah, I think
Yeah.
if we don't have frequency rate, it would be good to at least understand MTIs, LTIs.
Yeah.
To do any predictive hazard reporting.
Predictive hazard
Yeah,
reporting.
do we do hazard reporting or anything like that? Not really.
We do hazard reporting, which is more focused on when we have a hazard arise, correcting that, but we don't do, no.
No near misses, incident reporting.
We do near misses, yeah, we
Near
capture that
misses, I
data.
think.
Yep, see what near misses too.
I mean, I won't be here, but I mean, sometimes I've seen those reports and they've had general type of claim, so you can see whether there's a trend.
Like a breakdown in the mechanism.
No, it's back, shoulder.
Oh, so we've done that, if you know, we've actually put that in the insurance claim reporting, because we've sort of combined the whole, all types of insurance claims in one of the next report.
Yeah, but that's not going to be an ongoing report. Where
Oh,
it's-
where how often is this one coming? Is this one coming
I
more
think
regularly?
it's maybe by.
Okay, so get twice often. Okay.
And the other often is whether it's closed or open.
Okay, sure, yeah.
Yeah, for me, at least getting the MTIs as well.
Yeah.
Because I'd look at that and go 6 LTIs is a really high number. And I'm not sure what your targets and where you'd be sitting, but obviously the severity rate, given that 62 days, there may be something there that's a little somewhat severe. But just to get some more visibility on what is the nature and the severity of those injuries is important, and I think having MTIs is at least in addition is a good helps people to understand how much we are hurting people and how often we're hurting people in the business, because the aim should be zero. So anything we get in that space is important. So
No, I do like that sort of identification of hazards and reporting.
Yeah.
Well, the other one's the annual planning, actually your completion of that.
Yeah, yeah,
Which I know you'll do anyway, because that's part of your rebate that you get back from the
yeah,
scheme.
yeah.
Make sure you say what
Yes.
success rate has been over the last 10 years.
Yes,
We've achieved 100% on our rebate plan
That's
for
what
this
I'm saying.
year.
And last year.
And
that'll
last
be
year.
your KPI. So, no, but I think it's important,
Yeah,
because I think
yeah.
it is, because at least it's then audited by
Yes.
the GRS, so it provides a bit of an external view on that, so, which I think is important.
We're also doing a plan and programs review as well, so.
Yeah.
That's over 3.
Yes, 3 years. Yep, so prioritising current risks. Yeah.
Their new system,
Yes.
so we're-
Again, I've just put as noted above, and I'll include those suggestions in the minutes.
we're happy with that recommendation. Yep. Do you want to
Yeah.
move that, Pat? Peter, thanks, Pat. All in
Yeah.
favour? Excellent, thank you for that. 3.
Yes, okay. This item reports on a number of the key deliverables contained within the CEO and organisational KPIs adopted by Council of Special Council meeting in August, and specifically relating to Goal 8, leadership and culture, and Goal 9, organisational performance, both of which have an impact on the effectiveness of the organisation's culture. So happy to talk through that, as has already been discussed today, around the cultural development program and the development and implementation of that, which is underway, and a part of that being the staff culture assessment and satisfaction survey, which is our values, behaviour and engagement survey, which is currently underway. I just note a small error in the report to that it does say that it closes on Sunday the 12th of October, but it in fact closes on the 6th of October. We did talk about that culture development plan being over the course of the next 3 years, as so the CEO has already referred to. And the other goal was around the organisational performance. And so that was to develop the key metrics to report on biannually to the Audit and Risk Committee. So there have been a number of metrics that have been developed. Which has been outlined there on page 444 that we will report on biannually. And then it also in Annexure A includes that first report to the Audit and Risk Committee, noting that the period that has been reported on is from the 1st of January to the 30th of June 2025 for future reporting effectiveness, unless otherwise stated in the annexure. Can we take any questions?
Headcount.
Headcount, I believe. 160. Is that the 30th of June?
Yeah, 160 would be.
That'd be headcount. Yeah, yeah, because I have to use about 140 or yeah,
140.
one. Yeah, what do we go back to like statements at that 30th of June?
Yeah. Okay, just open it up. Open it up to questions.
Yeah, one bit, yeah.
Roberto, anything from you?
No.
No. Peter?
No.
Good document. When will we see some of the outputs of the survey, etc.?
So the survey will finish again this weekend, and then we will go into some listening groups. So the next part of that will be to get actual focus groups around distinct cohorts of employees to further drill down into the results of the survey. And we're looking for those to occur in around November, with being able to report back on that early in the new year around that. And then out of that will feed the what will be our cultural development plan.
And will that benchmark against anything previous? It's all.
So this survey is using the Barrett's Cultural Survey, which really sort of, as I mentioned, talks to our behaviours and how we can align the organisation's behaviours through to our current behaviours and the employee cultural expectations, and then we'll drill down into those workshops. And then I don't believe we've got any previous similar reports on that. We have done organisational surveys in the past, but they have addressed sort of a bit different issues.
Yep.
So it's quite a specific cultural survey that we use for the base. Also in the annexure, it talks about our council's talent management strategy, which is it talks about the interconnected components of that quite comprehensive strategy around talent review, performance management, development planning, succession planning, workforce planning, etc. So quite a big project going on there as well.
And just for the committee's benefit, the age group of 0 to 19, where we've got 3, that's showing our commitment to school-based traineeships. So we're bringing year 10s and 11s predominantly into our workforce for a 12-month period. So that's reflective of that number.
Okay, any others? No, all good. We'll have a mover, Peter.
Yep.
Pat, all in favour? Thank you for that report. Where are we? 3.4.
And so this report just gives a breakdown of the overall insurance claims for the financial year. It doesn't go into great detail, but it does pick up which areas that the claims have been in. Most of the claims are actually windscreen, which, when I looked at it, thought there was 14 there, but most of them were actually windscreen damage. That's not uncommon. And it does go into detail of what the type of work cover claims we've had, and also the public liability. So it's pretty general, gives you a brief overview of everything that's happened without going into great detail, but I'll take any questions or reply.
Yeah, I think when we looked at it, we because we've added that data on like the types of injuries, and there didn't seem to be any trend. It's all very a couple of the same type, but they're all very different. Have a look at that.
Pat, all good? Roberto,
I just, we were talking about claims before. There's 3 claims under the GI days, 45, 22 and 18. 3 of them are closed and one is three claims. 2 are currently, 2 are current and 1 has been finalised. Which one's been finalised? Is it the 45-day one or is it the?
Some of them
Yeah.
still have medical treatment happening with them,
Yeah.
so I'd actually have to go back and just double check
Yeah.
which one of those are.
The same, there's 45 days of quite a
Yeah.
significant injury.
All injured persons are now back at work. It's just maybe
Okay.
that the claim has not been closed out, but they may still be on
Yeah,
the
on final
support.
medical
Yeah.
appointments and stuff.
Yeah.
Yeah.
Okay. So
Yes, there's no ongoing LTI.
Yes,
Yeah.
yeah.
all right.
so do we have 62 or 82 lost time, or 86 lost time injury days? So I think the
Actually, I
report
think
before had
86.
62.
Yeah, so I think I haven't got to back and do some work on this, but I think Justin's KPI is derived from the 23-24
Right.
year, because I don't think we were through the 24-25 when those metrics were decided. So I think the 62 is reflective. Yeah, I
It's
think
for
it needs to be
24.
adjusted.
Yeah.
Yeah, I
So
agree with your figures. Yeah.
Yeah. Because that would have been in that report. I think we brought to last
Yeah.
audit committee meeting where
Yeah.
we finally report on the 23-24.
Okay, great. Anyone got any other questions on that one? No, all good. We'll move to the recommendation. Peter,
Yep.
thanks. Pat? Yep, all in favour? Done. Asset management, page 465.
Yeah, so this was just moving along our internal audit program, getting the next one moving. So this was asset management review was the next item on the list. So I provided a brief from BDO and a quote, which was within their quoted budget range. So yes, happy to hear any feedback on any thoughts around that. Noting, yeah, so this is part of council's internal audit program.
Anyone like to add any comments? No,
Not really. I mean, I think, obviously part of the whole overall asset management is disposing of assets which are no longer use, but you're doing that separately. So
Yeah, it's a hard one to
I
audit.
don't think
Yeah.
you can audit.
Yeah.
Peter, anything at your end on this one?
No, nothing, thanks.
My only comment is just making sure we've got the right level of focus on that item 5, the decision making for financial sustainability, given all of the discussions earlier today. Just making sure we get really thinking about what we're doing from that perspective. But otherwise, all good. So I might just have a mover on that one. Pat, thank you. Peter, seconder. All in
Yep.
favour? Thank you. Now, how are we going for time?
Getting short.
Yeah.
We'll planning to schedule the workshop from 1:30.
So we've still got some confidential items, and we also need to circle back to the business arising at the beginning of the meeting. We didn't, because we jumped over that.
Yeah.
To item 2.1.
Do we just soldier on, or do we want to have a workshop then come back into this? How do we best do it?
There's probably only 2 items left. The rest of verbal updates.
All right, let's keep going.
Yeah, so yeah, just 4.1, 4.2. I think we can deal with the rest as part of the workshop.
All right, 1.5 now though, while you're not in confidence. Right before you
Yeah,
go into confidence.
0.5 before we go into confidence. Is that okay?
Yep.
That's 1.4.
Sorry, 1.4. Yeah, just our business arising. So page 18.
What did we need here?
Just to note the business arising.
So there's an annexure on page, just up to page 18, that will have all of the business arising from the previous meeting, and I think most of it's been
Oh,
completed.
we didn't have that moved the second as well.
No, we can discuss that.
Okay,
Yeah.
someone would like to move that? Pat, thank you. Peter, second?
Yep.
All in favour? Thank you, done. So we need to move into confidence now. Okay, so Pat. You move, Peter second, we're in.
Yep.
Okay. So then we don't have any motions with that. We're going to park those remaining items, 4.2 through 4.5.
Yeah.
We have no motions without, with notice and none without notice, assuming. Next meeting to be confirmed, subject to David's availability as well. Okay, any other final business?
No.
The only one I'll have is, this is your final meeting, Pat. So just on behalf of the committee, wanted to sincere thank you for all of your efforts and diligence. Certainly been really valued, I think, in terms of the specific input you've had to the council across the time, and want to thank you personally for the contributions and wish you all the best.